Just looking at the market's moving up fairly strong. We started out bearish, put in a reversal pattern, and now we're beginning to reverse the trend and move higher. Currently, we're at a area where I have a Zuna SR zone, I have a SR level that I'm looking at. This is a sticky area, and I think we'll get a pullback to at least 1076, which gives me a good wide space that I can take a chunk out of the pullback. So this is an ideal place for me to take a short. I'm just looking for an entry signal uh, to get in. If we push above that level, then I won't consider short, since especially with the Keltner channels being up and they have the up color. Volume breadth is moving higher too. They're not extremely bullish, but everything's starting to look a little bit more bullish. So I want to just make sure that this level will hold. Yeah, it's holding. So too close. Okay, so on a trade like this, what I do is I put in my stop loss, just adjust it to exactly where I want, and then I have a target. So I'm looking for price to pull back to 1076 area, around that area. Um, and simply once I get short and I have my targets figured out, it's just a matter of sitting tight and letting price do its thing. I watch a lot of traders trade, especially when we get new traders in the office, and they will have support and resistance lines all over their chart in every area. And when you do that, there's no way all of those are going to be support or resistance areas. And what happens is they think that they make the mistake of thinking that each one of these levels is exactly the same, which is not. There's differences between each level. Some levels are extremely important. Some levels are temporarily important and then they lose their importance. So essentially, practicing with support and resistance levels and figuring out where they are, and being able to weight them and know which ones are more important than others and which ones are temporary and which ones are going to continue to affect price action is a big part of trading with these type of trade setups with a counter trend. So if you're planning on doing counter trend trading, what I would suggest to you is to truly, if your first thing should be understanding support and resistance levels and zones. Once you figure that out, the rest of it is pretty simple, and you don't need too many indicators. You just need a couple of good oscillators that give you short signals, and that's pretty much it. In order to be able to know if it's a counter trend or counter trend trade or a or if it's a trend continuation trend, then obviously you need to be able to judge the trend as well. So you might need indicators for your trend analysis, but the heart of that type of trading is simply understanding support and resistance levels. That's pretty much it. Because if you begin to look at oscillators when the trend is up, you're going to get a lot of overbought signals. In fact, these are buy signals instead of sell signals when the trend is up. So that's why it's very important to understand what the trend is and then use your SR levels and then take signals that occur on the SR level. So when you get a overbought signal at a SR level, that's when you would pull the trigger. So here we're stopping here, bounce up. If we bounce up, we want to see price stop at 80.75. Otherwise, I want to see price continue to come right back down to 1076. So what happens is you get your trend going, And a lot of traders will continue to buy these continuation trades. Then what they normally will do is trail their stop. So they get long here, for example, and they put a stop right under here. And when you get a spike down like this, and you're gonna take out the stops, some of them will have gotten long here, and their stops are here. So what's gonna happen is, as this stall keeps going on, these guys that are long are gonna start thinking, oh, okay, it looks like we're stalling here. So some of them will just get out of it, they'll close their positions, and the rest of them will just leave their stops. So as we start, this is the prior high, we start closing below this high, a lot of them are going to jump out. Those that continue to stay in, their trailing stops are going to get hit. So once that happens, then we'll get a nice push down, and that push will just continue to multiply like a domino effect until we get to some serious levels that professionals are looking at. And at that level, that's when they've been watching all this time. They don't hesitate. They come in and start buying, and we'll begin to move higher again. So currently, I was mentioned that we're going to get a bounce up to here. Then I want to see this area hold, and it's holding. So my trade is looking good. We just need to push and close below this last high. Once we can do that, then we shouldn't have any problems moving further or selling off further. You're probably wondering, well, if the trend is strong, why are you even bothering with counter trend trades like this? Because counter trend trades like this only happen, what I call counter, because this is a counter trend, this is a counter trend. These type, they only happen, there's only a couple that are high probability, and it's worth the risk for me because, for example, on this trade, I'm first of all only doing 10 contracts, and I'm risking about it, let's say about with commissions about $900, and I'm looking to get about approximately 22. I'll probably net out about 2,000 out of it. So I'm risking one to get 2.5. So it's gonna it the risk reward ratio is good, and these trades are high probability. So I get 8 of them right out of every 10 trade I do with that kind of risk reward. It's well worth taking those trades, and they're easy trades too because I put in my stop and I don't have to scale out or anything. I just wait for my target to get hit. That's it. Now sometimes I might get a support and resistance level wrong, and I start seeing that price comes down to a certain level, and then all of a sudden I'll just remember, oh, I forgot about that. That is a strong level, and I'll get out, and my risk reward will be a little bit lower. But as you can see, as soon as we closed below that high, now all these continuation players know that something is up. So now they're not going to step in long. A lot of them, those that haven't figured it out yet, are going to have their trailing stops continue to get hit, and the domino effect will continue, and we'll start to begin to nicely move lower. So the next thing you do with these type of trades, once price moves in your direction and it gets away from you far enough, you identify the nearest resistance level, and you put your stop 1 or 2 ticks above that. Okay, but if you don't have a resistance level that is strong, then don't place your stop above that. So in my case, I'm putting my stop right at 1081. I meant to put it at 1081. And now I've reduced my risk to 250. So do you see how that worked? Price is moving, but you make money if you allow trades to move in your direction and your risk reward is greater than what your initial risk was. That's the way trading, I mean, you can't get around that kind of math. So, or that kind of common sense, I should say, because it's really not difficult to understand. But reducing your risk as the trade moves in your favor. See, now this is where a lot of people are going to begin. We just took out this high, which is a very important high, and we're going to probably just continue to move a little bit lower. We might bounce around this area a little bit, but then move further low. So trade's looking good. We'll just continue to manage it. Okay, so now we are back to, as you can see, my stop didn't change. I'm still short at 1080.50. Now we basically are at the levels that I want to begin to take profits. This trade might have more on it. However, I'm satisfied with following my original plan and just waiting for it to tick down just a little bit more, and it'll be the right place to I'll be able to take my profit. I drew this line here that it is okay for me, this line here, that I could take profits here, but the way we came down, I'll just wait till we test the 76 area and I'll take profits there. I'll close my trade there. I want to, once we hit 76, I'll be at around 2250, and that's fine with me. That's what I wanted to get out of the trade. Okay guys, so I'm around 2500 on the trade, so I'm gonna just close the trade there. And that's basically, hopefully you got some tips about reversal trades or counter trades, how you should do them, and good luck. Hope it helps.